Just investing in stocks? Possibly. So we believe that listed and unlisted infrastructure are actually quite complementary allocations. Now, we're looking at the same assets, same types of assets, in some cases exactly the same asset. Some assets are owned by the listed market as well as the unlisted equity funds. I think Transurban's a great example. Its US road portfolio is owned by Transurban and unlisted infrastructure investors. There's stocks that move, or there's assets that move between the listed and the unlisted space. Is there an opportunity cost? I don't think so. I think they are completely and utterly complementary. And I think having both listed and unlisted in a balanced infrastructure allocation gives you greater diversity and opportunity. And what I mean by that is there's certain assets, such as social infrastructure, that are much more prevalent in the unlisted market. We don't get a lot of opportunity for social infrastructure in the listed market. By contrast, there's more opportunity sets in certain subsectors in the listed market, such as US regulated utilities. US regulated utilities are largely owned by the listed market. Greenfield assets, largely more attractive to the listed market. And even some of those perceived riskier markets, such as the emerging markets, the listed market gives you liquidity and the ability to shift. So having both in an allocation really allows you to get the full breadth of what the infrastructure universe offers you. And I think the one other point I would make is that listed gives you liquidity. Now, it also gives you volatility. Now, they go hand in hand. We are an equity and we are repriced daily. That volatility can be incredibly frustrating for a listed infrastructure investor, but it can also be a huge opportunity to add value. And I think, again, we come back to March 2020 and those airports. The unlisted infrastructure investors revalued their airports just as they should. They revalued them down about 5 to 10%. We think they got it right. We think the listed equity market selling off 30 to 50% got it wrong. That represented a huge opportunity for us to buy airports cheaper and add alpha over time. That's hard. We're spoilt for choice. Look, I think I'll give you a couple of themes maybe that we're looking at. We are really, we're very keen on the energy transition and the decarbonisation opportunity. We believe some of the integrated regulated utilities who have a huge opportunity to invest in not only the renewable deployment, but also in the grids to strengthen and support that renewable development. We've got stocks that have got $100 billion investment profiles over the next 5 to 10 years. This is a huge opportunity that we want to capitalise on. So stocks like Iberdrola are out of Europe and Enel out of Europe and even sort of some out of the US are offering significant value. Now, our biggest position, though, is a stock called Cellnex. It's a European tower operator. We all know what's happening with the communication space. Huge opportunity set there for increased usage of communication data. I think COVID highlighted that more than anything. It's been completely sold off in the last month or so on the whole bond proxy trade or interest rate environment. We see that offering incredible value at the moment. It's really capturing a big thematic, a big long-term thematic, while we don't see the same inflation risk to it because their contracts are hedged. Fantastic opportunity, absolutely fantastic. I think what we say about COVID is actually enhanced the long-term infrastructure opportunity. As you point out, huge stimulus programs around the world. A lot of them are focused on infrastructure and in particular the energy transition. There's a huge multiplier effect of infrastructure investment into employment and economic recovery. Governments recognise that, so it enhances that need to spend. The governments clearly spent a lot of money on social support during COVID, as they should do, keeping their populace fed and clothed and homed. But what that means is their balance sheets are not very strong right now. So they need this spend, they need this investment, they need this economic recovery. So they're relying more and more on private sector capital to help them do it. Now that's a huge opportunity for us. It's a huge opportunity for both the listed and the unlisted market. Even if governments do it themselves, they're going to be looking to rotate that capital at some point in time, and we'll see more privatisation opportunities down the track. So I think it's one of the best things for us to come out of COVID is the fast tracking of infrastructure spend and how we and the companies that we're investing in with their very strong balance sheets, their very strong strategies can now capitalise on that opportunity to build for the future.